Absolutely. So DFC was launched in 2020 as a successor agency to OPIC, and we are, like other development finance institutions, investing in development impact, commercially sustainable projects led by the private sector in emerging markets. We have a $60 billion capital exposure limit globally, and we've got over $45 billion in our global portfolio. Sub-Saharan Africa is our largest region of investment with over $10 billion in our investment portfolio. And we are growing our investments as an LP into private equity and venture funds. Last year, we invested in a number of funds in Africa, focused on infrastructure, on venture capital, women's empowerment, and investing in low-income countries. For a few things. First and foremost, we are a development-focused institution, so we're looking for alignment on development impact. So we're looking to understand how will the fund contribute to sustainable economic growth in the markets where it's going to invest. And this could take the form of being a traditional PE fund that's providing growth equity. It could be in the form of focusing on a specific sector. So for example, last year, we committed $10 million to the Transform Health Fund managed by AfricInvest, and healthcare is a sector of high importance for DFC, and so this fund is really amplifying our objective of increasing access to quality healthcare in sub-Saharan Africa. So that's one example of a sector focus. We also invested in a number of infrastructure funds that are aligned with our objectives of supporting access to critical infrastructure or clean energy. Those funds include Africa Renewable Energy Fund 2, they include Pembani Remgro's second fund, they include AIM's fourth fund. So really we've been investing across the sector in a variety of ways. We look for that alignment on development impact. We look for a team that knows the continent. I mean, we are investing in fund managers in the hopes that they're going to be able to deploy that capital on our behalf in a way that amplifies our impact. So we're really looking for, it doesn't have to be a second or third time fund manager, but it does have to be a fund manager whose team is experienced and knowledgeable on the continent. We're looking to understand their track record. We're looking to understand who their other investors are going to be and that they've gotten fundraising traction. And then finally, we're looking for funds with an investment strategy that we believe fits the market. So we have started growing our investment portfolio in the venture capital space. I think it's a really interesting growing space among the broader fund universe on the continent. We've been investing, we actually invested in a few first-time women-led funds in the venture capital space, including Atlantica Ventures First Fund, as well as Django Capital in West Africa. So for us, I think that's a space to watch. It's going to be really interesting to see how deploying that earlier stage capital can help build an ecosystem for greater financing, access to finance for businesses on the continent. I think another trend that we've been closely watching has been climate. For us, it's a top priority as a US government institution. And so we've been thinking about what are the different ways in which we can integrate a climate lens into our investments across sectors. And a great example of that is just a few months ago, we committed to Novastar's second fund, their People and Planet Fund, which is really going to marry venture capital and climate. Really exciting combination. And so we're hopeful that we'll see more and more innovation in that space. We do have an appetite. We do look at first-time fund managers. It is a competitive market out there and a lot of people are raising capital, but we are investing in first-time fund managers and we have numerous examples. A lot of them are first-time fund managers who are perhaps working together as a team for the first time, but actually have tremendous investment experience in Africa, and that would weigh heavily in their favor for consideration by DFC. A lot of the first-time fund managers that we're looking at are taking a fresh approach to investing. So for example, Django Capital, whom I mentioned, it is investing in markets in West Africa where we as DFC don't have a tremendous amount of exposure and where there is a dearth of access to private capital. So we find that that investment thesis quite compelling. So I think the message from DFC, because I often hear from GPs that DFIs don't look at first-time fund managers, is we will look at them on a case-by-case basis, but we really want to understand your investment thesis, your experience investing on the continent, and we're taking a portfolio approach to understanding where should we as DFC, where are we underweight, and where should we be focusing. It's a great question, and I think it's a really tough one. But I would say as a long-term investor in emerging markets, even as other capital may be shying away from Africa or spooked by industry-wide trends, we are doubling down and reaffirming our commitment to investing on the continent. We're a long-term investor. Cycles come and go, and currently the macro climate for emerging markets is quite difficult with high interest rates, but we're taking a long-term patient view. So that's, the first point. Second, I think while the trend as an industry may not be that optimistic, I think that there are pockets of excellence, and we really pride ourselves in getting to know the differences in the markets where we're investing, the differences among the fund managers and their approaches, and identifying who we think has the potential to really perform well. And lastly, I would say one of the learnings for DFC coming out of the pandemic has been, we've seen a rise of a lot of tech-enabled businesses like e-commerce that promise to grow at astronomical rates. And I think innovation and technology will only get you so far. You can't leapfrog having critical infrastructure that moves people, goods, and information from point A to point B. And so for us, a key learning has also been coming out of the pandemic, we do need to continue to focus on sectors like critical infrastructure that really form the backbone of efficient operating environments for businesses to thrive.